be successful in a soft market, carriers, wholesale brokers, and agents must enhance their focus on customer service, says Mike Miller, president of Scottsdale Insurance. In this interview with Insurance Journal, Miller says differentiating your firm from your competitors is key to winning in a soft market. How can the wholesale broker differentiate themselves in this time to be successful in the soft market?
Well, I think first of all, everyone is looking for service, and so as they look at what they do and how they do it, they really need to be very responsive to the retail needs, the insured needs, and so service, I think, is at the top of the list. We also believe speed wins. So when thinking about how to service an account, many times those accounts are coming to the wholesaler sort of very close to the inception date of the policy. So speed is very important, being responsive, being able to get back to the retail agent with a quote very quickly is a key component as well. So service and speed, in my mind, are at the top of the list. And I think also being out in the market. In a hard market, you're basically, you quote business and you move on to the next account. Now it's quote business and then start working with the retailer on how to adjust either price, terms, or conditions to be able to write that account. So it's much more important to be responsive, quick on that response, but also being out in the field and visiting those agent offices, talking to them about what they need at that retail level. So I think that's a very important component as well.
Looking at today's market, how do you think it might compare the soft market cycle with others?
The thing that I think is a bit different now is that this cycle didn't come on slowly. It came on like a freight train. So about fourth quarter of '07, especially on the binding authority business, we saw a dramatic change where we actually saw a significant drop in premium, mostly rate driven. So it came on quicker than I think it has in the past. So the question is, everybody wants to know is, so when will it change? We think it's here for a while. We spend a lot more time in a soft market than we do a hard market. So I think it's around for a while. Even if we have a hurricane or some catastrophic event, probably what that may do is harden coastal property rates, but also drive companies inland in looking for additional business. So while it may harden prices in coastal property, the rest of the country would still stay soft. So the other question in my mind on the soft versus the hard is we compete with the standard companies from the standpoint of their risk appetite. So when they become more aggressive, they dip down into the E&S marketplace, so to speak, and take accounts back that they wouldn't write before. So if their results deteriorate, will their underwriting appetite change in order to try to improve their results? And I think that could have a significant impact on the marketplace. The other thing that I wonder about is the impact that Sarbanes-Oxley and many of the initiatives that companies have done, or regulators have done from the standpoint of regulating financial reporting of insurance companies and public companies, that really put more pressure on companies to really report the results as accurately as possible. So getting the right reserves on your books, getting those reserves on at the right time is important, because I think that then causes the results to be reported more accurately sooner than maybe in some of the other soft cycles we've had. If that's the case, then it should shorten this cycle from the previous one.